Okay, we're live, everybody. We Start Engine first quarter results. So I'm going to wait just a few seconds as people are coming in. This is pretty exciting. And yeah, we got a lot to talk about. Okay, I'm going to get started. So I'm Howard Marks. I'm the CEO of Start Engine. I'm really excited to have this first quarter financial review. As you know, we publish all our financials on a quarterly basis, of course, annual, of course. But on a quarterly basis, we publish them within 45 days after the end of the quarter. So now here we are, May 19th. We're going to talk about what we've announced. So we have the big headline is we generated 30 million in revenue, which is about 3 times year-over-year growth from last year. So going back to our company mission, it's to help entrepreneurs and investors to achieve their dreams. So here is the basically the recap of the whole thing, just so you can see it. So revenues are 3.4 million. We have income of 1.7 million. Now, just so you understand, the income of 1.7 million includes non-cash items. What are those non-cash items? Mainly stock option compensation and the depreciation of our purchase of StartEngine, which we purchased it a couple of years ago, and you have to depreciate it over a pretty long time. So these items are non-cash. So we like to propose that we talk about what we call adjusted EBITDA. EBITDA means earnings before interest, tax, depreciation, amortization, which is exactly what we just talked about. So if you take out those two items, we have a $5.2 million EBITDA. That's a number. And 1.7 million as a net income. In terms of cash, we're almost $19 million of cash. So cash is going up. We have also a couple $1 million in account receivables that, so far everything is working out well. And then to the right, you see a more detailed analysis of our financials. I'm not going to go through all of that. You're welcome to pull it up on the SEC file. You can see below there is a address you can't copy, obviously. So what you do is you go to sec.gov and you search for a company, you type StartEngine Crowdfunding Inc., and then you'll see us, and then you get all the stuff you need. Okay. So for the first quarter, I went through that detail in the previous screen, so I don't have to do it again. So we can move on to the next screen. So what is going on? The main thing to explain is we have two product lines. We have the crowdfunding, which is where we started at. And because we did crowdfunding, we had the opportunity to expand our business with StartEngine Private. It's basically giving access to investors to funds that hold usually one stock. Sometimes it doesn't. Sometimes it's more than one. In what we call pre-IPO companies. These are companies that are past the early stage. They're usually late stage, last stage before going public. Some people can call them mezzanine stage. Some people call them late stage. Some people call them pre-IPO stage. There are a lot of names out there for the same thing. And if you can see the companies that we've listed here, many know who they are because they're always being discussed in the Wall Street Journal and other financial publications. And they are companies that are technology, AI, non-AI, but always dominant in their field and sometimes even disruptive. So this has been very successful for us. These funds, we create one fund usually per stock, but sometimes we create 6 stocks in a fund. And we're limited to no more than 100 per fund, 100 investors per fund. And then when we get the investment in, what we do is we manage the fund. And when the company either goes public or gets sold or there's a liquidity event, then we will give the investors their pro rata share of the fund. And we keep 20% of the profits at the end. So basically, if an investor invests $100 and let's say there's a $200 outcome, then the investor would get their $100 back and $80 of the next, because we take $20 of the profit. So they would get $180. That's basically how it works. In terms of how is StartEngine Private doing, as you can see, we started very more late 2023. The first revenue came out in the last quarter of 2023. So it's a little bit over a year, it's almost a year and a half now that we've been building it, and it's been growing very nicely. What we're finding is that the interest in pre-IPO shares is very important. And I'm publishing a newsletter that's coming out in the next few days that explains a little bit our thinking, which is that investors should consider making their portfolios built with what we call equities, public stocks, bonds, fixed income, and what we call private equity. Private equity is a big buzzword now in Wall Street. You have a lot of great thinkers in the world of finance and wealth management who are calling for what they call the 50-30-20. The 50-30-20 is basically 50% in securities, 30% in fixed income, and 20% in private equity. And I think this resonates very well with investors who understand that in order to do well with their portfolio, they need to diversify. So in the past, the diversification was across two types of, I would call it, asset classes, and now it's three. And that third one is us. We're one of the few companies that offer it. And we think it's just going to keep growing, but who knows? We don't give any forward-looking statements, so we're not going to talk about what we're going to do this quarter being the second quarter. But overall, I can give you a picture of where we see the landscape of the marketplace. To the extent that we're able to take advantage of it, it's great. So in terms of our revenue, so if you look at the first quarter 2024, we did 9 million and now we did 30. So that's 3 times or more than 3 times. It's a record for our company. We have not achieved that type of revenue in the past. And so we're pretty excited about it. And the EBITDA, I explained what it is, adjusted EBITDA. There are lots of names being used but companies like Facebook, for example, they always publish what they call the EBITDA. They always talk about it. And they're a public company and they do that. I think investors want to understand really what is the profit and what are the profits before some of the non-cash items. They really want to know what that is. So, and interest. But by the way, interest is a cash item. Taxes are a cash item, but stock options and depreciation of one of our acquisitions is not a cash item. So I'm glad you came. Thank you for listening. I'd love to take your questions right now. So first question is, what do you predict for the rest of the year? Unfortunately, we cannot predict. We don't predict. So we keep you guessing. I know that is true. It's mainly because it's too hard to do forward-looking statements. That's why. And we don't have analysts, so it's not like we need to have analysts. You know what I mean? We don't need analysts in our industry. And mainly, once a company goes public, you do need analysts, but we're a privately held company. No one's going to follow us and analyze us. Let's be honest here. We would have to have massive results for someone even to know who we are. So what we decided is, look, So we're not going to predict anything. We're not going to talk about it. And here we are. When are you closing the round in June? And what's the specific date? So end of June is when we're closing our current round. Our current round is halfway done. So it's a $20 million offering. We're halfway done. We've seen quite a lot of progress in it in the last week since we announced our earnings. And that's our plan. So we have roughly 5 weeks, roughly a little bit more than that. Next question is, what are the plans in going public? We get that question every single time, and I always answer that question, which is, yes, we're interested one day of doing it. We just don't know when. I have to tell you, the market for public offerings is starting to get a little better because you saw eToro going public. They're also a financial technology firm like us, and it did well. And Chime announced that they're going public, so we'll see how that goes. I think that once you see, I would say, a steady number of companies going public successfully, right? Successfully, that means the market's reopened. We should look at it very seriously. And I think you saw our first quarter. You haven't seen our second quarter. We're not even in the third quarter yet or the fourth quarter. So obviously, there's a lot of work that we have to do on our side. But should we have a very successful year, which I hope we do, then we should take see if the market is opening up. And again, that's out of our control. We don't know when the market opens up, but the signs are starting to show. Now, we also have a lot of volatility in the market. Today, announcement that the Treasury's yield went up to 5%, which is incredible. So that's maybe a sign of concern that we're spending too much. Maybe that is what's going on. I don't know. I'm not an economist. I don't predict the market and the economy. I just react to it and live with it. And we're pretty careful as a company. We try to establish some good controls, so we don't go crazy. Next question. Does StartEngine also own stakes in the private raises? For example, does StartEngine own shares in Anthropic? So we don't own any of those shares. We did own them initially because we had to buy them. To the extent that we don't sell out 100% of our stock we've purchased, we'll hold it. But what we do own is an interest in it in terms of our 20% profit. So we have a profit interest, but we don't have the actual shares. But we do, if you look at our balance sheet, you'll see some shares that we own because it's inventory, right? We need to hold inventory. So with private performing so well, what's the next product in the pipeline? So we're actually talking about this carefully. We're looking at the market and what's going on, and we see pockets of opportunities in a similar vein as to StartEngine Private. So we don't work with a lot of institutional clients and home offices, family offices, but we should look at that. So we're going to look at that. We're going to look at what are those large investors buying? What are they selling? Typically, these families are pretty active in owning private equity. I'd say the history of private equity has mostly been family offices, hedge funds, institutional players, pension funds. They're the ones who are very active in private equity. We go directly to the end investor, the ordinary investor who is accredited for StartEngine Private and unaccredited for the rest of the stuff. So we're looking at that, how to attract the institutional investors. The other thing we're looking at is the SEC. So I spent this weekend going through the SEC website. They have a crypto task force, and they've published videos of their public meetings, and they invited people from the industry to discuss how are they going to make securities, private equity, what we're doing, on the blockchain. The question is, why should it be on the blockchain? And then once we answer why, how. These are still open discussions. what we've heard, we've had a meeting ourselves with the SEC, and that was published on the SEC website that we had our meeting. The content of the meeting has not been published because it was a private meeting. But as you can imagine, I had a lot of questions, but they typically want to listen to for us. So I gave them feedback, and I published a letter that is on the website of the SEC, and the letter is from that I wrote that explains what we want. So it's a summary of our discussion. It's great. So you can read it and you can see if you think what we're thinking is a good thing. But I'll give you the high level, very short summary. Is basically simple. We want Reg crowdfunding, to increase its amount from 5 million to 50 million. We want Regulation A go from 75 million to 250 million. We want the ability to make Regulation crowdfunding or Regulation A a fund, so you can hold, instead of just a company, could be securities in one or more companies, like we do StartEngine Private. That will allow us to open up past 100 investors. We want the blue sky laws, which are laws on every state on how you issue and trade securities, to be waived, like they are waived for Regulation crowdfunding. They're waived. The blue sky laws are waived, meaning they don't come into play. We would like them to be waived also for trading. So when you can start our trading platform, which is Marketplace, our trading platform could benefit from it, because now we can market it, we can solicit investors, we can drive them towards our platform, talk about pricing, all of the good stuff. And now the other thing we said is, yes, we would like to tokenize securities. We'd like to securities go on a blockchain, could be Ethereum, could be Avalanche, could be any of the blockchains. But we would like to have the ability to maintain all the shareholder information on our transfer agent, which is called Secure. So our transfer agent will still have the responsibility for holding securities, but the blockchain is where you will have the public information on which account owns what, and if it gets traded, what happens. So there's a lot of, I would say, pretty interesting, very cool things that can happen in the short term within the next 2 years, maybe less. I'm pretty bullish about it. I'm excited. Okay. How do we look at the defensibility of private now that we fund the Republic and issuance are offering similar products? Well, I have to say that it's good. We want the market to have competition. We don't think there is a market if it's only one player. So that's good. How do we defend ourselves? Well, I think we have a great community of investors. That's number one. I think we might have a better one than the other ones, just because we both seed invest. So we took the 700,000 that they had, added to our list. We're close to 2 million, but not everyone is accredited. Not everyone is active. We also, I think we have a pretty good marketing program with Kevin O'Leary. I think we have good platform, good technology, where a lot of investors give us feedback. For example, we have an app. Not all of them have an app. Some of them have it. And then our app recently, last week, we tried the streaming feature, where you can stream instantly any offering. So the CEO can go and say, hey guys, I'm here. Let me tell you about something new. Show the video of what they're doing and close the meeting within minutes and drive more engagement. That feature, no one else has. I know it for a fact. So now they'll have to copy us. So maybe there's no pure, true defensibility in the sense that we have a patent and then no one else can do the same. That's not true. I think staying innovative is a way to defend yourself. I think having a strong management team, which we have, that is stable, has been with us almost 10 years, the entire team. It's amazing to watch. Great team, stable team, committed, They understand our business. It's pretty great to see that. Next question. Revenue has increased threefold, yet the market cap hasn't changed that much. Well, the market cap would change if we had a new offering, but right now we have the current offering. So we can't, you cannot change, if an offering is open, you cannot change the price, the share price, because if you do, then the offering has to end and you have to basically restart the whole process again. So we decided that even though we had an amazing quarter, it's an amazing quarter, I think it's amazing, we kept the offering open and we're going to fill it up by the end of June and then we're done. What will happen after that to the market cap of the company in terms of its price? Who knows? You know, I'm not here to predict that, but we will see. And we hope that the market will reward us with our financial results. Next question. Are there any, or will there be in the future private offerings that are under 7,000 minimum ask because I already invested in companies directly? Okay, so there's interest on being less than $7,000 for private. That's a difficult one. Here's the reason. Private, we're limited to 100 investors per fund. Unless we put up a qualified fund, which means investors have $5 million or more of investable assets. And these are, I would say, wealthy investors. And unless we do that, we're limited by 100. So if we start offering at 7,000, that means the fund will fill 100 people and will raise $700,000. Typically, our funds are around 2 million. So that would reduce our revenue. So I'm not sure that we're going to go in that direction. But the one thing you should know is we have also funds where we put 6 companies in a fund. So instead of going in and saying, I'm going to put 5,000 times 6, that's 30,000. Put 30,000 in one of the funds and get access to the 6 companies. And for us, it's better because we have now a $3 million fund instead of, you know, a small fund. So I think there's a lot of interest in our funds. And so I think going down in terms of the entry amount doesn't really help us. And investors who feel that they should invest $2,000 in one of those pre-IPOs, I just don't think it's enough of an investment to make any difference. It's not that interesting. Next question. I'd like to invest through a Roth IRA to take advantage of tax advantages. And I agree with that. So we made a deal with Equity Trust, which is one of the largest trust companies. They allow you to do self-directed investments from your IRA, Roth, or traditional IRA. And we rolled it out. It's in testing, so it's beta. It works more or less. We're going to fix it up. We're working this week, next week to make it really as solid as possible, and then we're going to roll it out. And the great news is Equity Trust announced to us that they will let their entire user base use it. And they have 450,000 investors who are looking for investments for their IRA. So I think this is one of the very strong areas for StartEngine Private is to use the IRA for investment because it has massive benefits. One is that you can invest through your a retirement account, and you can, if and when the company goes public and there's gain, shelter those gains and then reinvest in more private and keep doing that until the IRA account is no longer needed. And then obviously upon retirement or later, you can take the money out on a tax basis method. If it's Roth, obviously, there's no tax on the exit, but traditional does have it. So anyway, I'm not a tax person. You should definitely consult with your tax people, but I think that it's a very valuable thing to have. So we've integrated StartEngine with equity trust. We might integrate other companies with equity trust. We might do that. So that would be good. So we're going in that direction. Next question. Instead of IPO, what do you feel about dividends or future about becoming profitable? Or the future after becoming profitable? Or an M&A like BlackRock or NASDAQ? Wow, you guys have amazing questions. So, how does it feel, dividends? Yes, dividends is a good idea. Once a company is ongoing profitable, I think it's a good idea. And that means you need the board of directors to vote it. And then we pay the dividend to all the shareholders. So it's a great way to have income out of your investment without selling your shares. The other thing about M&A, like BlackRock and NASDAQ, I'm sure there's M&A out there. I haven't looked at it. I don't have any conversations with anyone. So, I think I've been more focused on a potential IPO because I think you get a much better term sheet opportunity, in terms of what the terms are for the price per share. But on the other hand, we're open-minded, to the extent that there's an opportunity, we'll look at it. Next question, what's the process for distributing the Chime shares when it goes IPO? So it's pretty simple. So once we receive the cash or the shares, let's say we receive shares, the shares are not public in the fund, we'll notify the shareholders. We have a period of restriction. I can't tell you what it is. Typically it's 6 months, but it might be less. It depends on when we purchase the shares, what was attached to it. But let's say there's a 6 months. So after 6 months, we can sell the shares. So either we will contact the investors and ask them if they want rather have cash or the securities. And to the extent they want cash, we will send them the cash into their account. To the extent they want securities, we have a way of transferring it. We have a broker that holds public securities. We don't. So once the Chime shares, if and when they go public, we will move them to a major broker that handles public securities. So at that point, we can contact the investor and have it sent to their accounts. In terms of fees, I'm not aware if there are any fees. There might be some fees. Sometimes if the company goes public, uses computer share, there's some fees. Sometimes there aren't. That's something that we're not really. But for us, we don't take any fees except for our profit participation. But we personally don't take any fees. How hard or easy is it to find a quality investment like SpaceX, OpenAI? I would say it's hard. It's hard. Yeah, the main thing we look at, there are a lot of issues. There's issues of who's selling, what's the reputation. There is fraud in the industry. We're certain of that. So we have to do the right thing, be careful, work with the right quality people, and also demand all the documentation. Then there's a process for transferring the shares, which is not obvious. We have to buy them, transfer them. There's a lot of legwork. There's document review. I don't think it's easy. If it was easy, a lot more people would be doing it. I think it's pretty hard. Next question. If StartEngine raises money for a pre-IPO company, is it guaranteed liquidity post-IPO? Guaranteed liquidity. Well, I think I see what you're saying. Are we able to, do we have the right to participate in the registration? I think the answer is this. once the company is public, then our fund that holds the shares will have public traded shares. Now, some of our funds owns shares in another fund, and that fund will need to first liquidate and then pay us out. So I don't think I can answer your question exactly on a simple basis, but if our fund holds the shares, yes, we have liquidity. If our fund owns shares in another fund, then we have to wait for their liquidity to get liquidity. Do any of our customers use DAQ tokens to raise funds? I do not know what a DAQ. Forgive me. DAQ. Maybe it's a term like decentralized something. I'm not sure. Sorry. Next time, please don't use too many acronyms because sometimes it's hard to figure out. All right, next question. Any way to mark the private assets on a daily, monthly basis so we can easily see the FMV when needed? Wow. That's a good suggestion. Let me look into it. Yes, those private assets do fluctuate. I don't know if daily is helpful because this is a long-term hold, but monthly could be good or quarterly for sure. So I'll make a note of that. Do you have any investment coverage insurance? Okay. We don't insure. Okay. So you can insure a fund. It's possible to insure a fund, not ours, but you can insure funds. For example, the mortgage-backed securities funds. You can buy insurance. People are willing to sell insurance for all sorts of things. We have insurance as a business to protect us from liability. But if we buy a pre-IPO share in a company that ends up going bankrupt, if that such things happens, we're not insured that, oh, well, all the loss is recouped with an insurance policy. That is not, we don't have that. What percentage of StartEngine users are accredited? We think definitely 5% that we know of, but we know it's more. The reason is because we found through sending emails a lot more people who were not marked as accredited becoming accredited because they were interested in participating with a StartEngine private offering. So we know it's more than 5%. It might be 10%, but no, I don't think it's more than that. It's a massive number, by the way. Given that we have 2 million names on the list, it's probably 100 to 200,000 people. It's a massive number. It's so big. It's going to take us time to, work through that list and make sure everyone's aware of what we're doing. And as you can see, there's a lot of demand. Okay, well, thank you, everyone. I'm glad we had that opportunity to get together on a quarterly basis. We'll do it again the next quarter. And we're happy to say that, as you can see, the company has had a healthy financial result. Again, we'll see what happens this quarter, but I'm working really, really hard to grow the business and get to a point where we all can enjoy the benefits. So thank you very much, everyone, and have a great day.